This week on Sylvia's Traders Lounge.
Why is time important? Because price and time in combination is the main aspect of the Gann theory. And I do not trade price levels. I trade price and time levels.
Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Thank you guys for joining us today. Welcome Zipporah, welcome Alex. It's been a while since we spoke to you, but we're truly honored to have you back on our trading lounge. And so today we'll be hosting Alex. Just to give a brief history of Alex, he's been a doctor before, but he switched to full-time trading, and that's why we're having him today. We also interviewed him a while back, October 2021, and so this is the second time we're having him on our trading lounge. So Alex, maybe you can tell us, since we spoke, how your trading maybe has changed, if there's anything you have added to your trading toolkit and whatnot.
So thank you very much, firstly, for your invitation. What I wanted to say at the very beginning, since I also work for, or my main job, my day job is at the investment branch of a European bank, that I'm doing this as a private entity, and this webinar is not related in any sense to my employer, to my work. So that's very important for the compliance.
Yeah.
Good. Hello, everybody. Hi, Sylvia, again. October 21. Almost 1.5 years. It's before the Ukrainian crisis, before the war started. Yes, so it's like 2022, a very challenging year for us traders, for the markets, with many uncertainties, primarily the war. Then central banks started to raise interest rates, and alongside with the hiking in interest rates, the big fear of inflation suddenly came around, and yeah, quite a challenging year. But so far, I think we are just around another turning point now. So the time is quite good to speak now, and yeah.
Okay, all right. And so I know you normally trade the German index from our last conversation, and you use the Gann theory to do that. So maybe you can just go direct to the point, and maybe you can give us an illustration of how you conduct your trades. So let me give you access to share screen. Yeah. Then we'll have the questions streaming in from as we go. Yeah.
So the screen is shared now, I suppose, or should be. Okay. So maybe some quick introduction. What is Gann? What is his theory? Basically, why I'm trading this theory, or an adapted theory, because I was looking for some kind of scientific and mathematical approach. The three main aspects of Gann and his theory is the mathematical, the geometrical, and also I don't like the term astrological, because it has nothing to do with like signs of the zodiac or whatever. The astrological aspects in my understanding and how I treat this is a timing aspect, because certain recurring events like the changing of the seasons in a year, or lunar eclipse, solar eclipse, etc. Those are very accurate dates where you can build your cycles on. And this is, in my understanding, the timing aspect, the astrological aspect. Why is time important? Because price and time in combination is the main aspect of the Gann theory. And I do not trade price levels. I trade price and time levels. Those given Gann angles and price levels determined by time by trading days and obviously calendar days. That's always the discrepancy between what is the correct calculation. Do I use trading days, which are obviously only 250, 252 per year, or do I use calendar days? So this still isn't clear, and this still marks a big problem in the timing. So I decided to put both on the chart. And I have two big sets always in my daily charts from the 2003 low. That was after the dot-com crisis in 2000, the low point, and the low point of 2009 after the subprime crisis. The dashed line is always the 1 times 1, basically 1 point per calendar day or trading day. So that's the perfect harmony between time and price. And when you look at the light blue sequence, for example, starting at 2003 and going that way up, the low point of 2009 exactly came down to that 1 times 1 line, and then market started a reversal. Same with the white one, which represents calendar days. Not so far away, it was the low after, or at the beginning of the COVID crisis. It came down right there. So it's pretty good to have all those angles and lines in the charts. But I also wanted to say is I do actually not draw those charts by myself. I have my software, my own software, my own scripts, and this is everything calculated by different data feeds depending on the time frame I'm looking in. And on the daily, I'm pretty conservative with Gann. That's a strict Gann setup. Intraday, I'm using those more sophisticated things like options for the German DAX index, options, weekly options, and of course the options which expire alongside with the front contract of the future contract. This will be actually next week. for DAX index, also for the bigger indexes, S&P and Dow, etc. And I could create a pretty good system where I relate option buying and selling activity to intraday futures activity, which is shown, right here in those 6 colored lines. This is also the chart I normally post on my Twitter feed for any intraday guidance. Those lines basically represent selling or buying options of certain strike prices, and for different time frames. This is also very important to say. And green, red, and white, those are my favorite ones. So I always expect any reaction on those lines or slightly around those lines. If the lines get tight, it means, like in other moving averages, it means a big move is around the corner. We had it like here. And going back the last few trading days to last week, where the market topped out in the first instance at the beginning of the month, made a drop, and as you can see here, and this is also, you can also find those on my Twitter feed. According to my model, the market told me that it wants to go up again. So that's basically what was I'm tweeting here right at the bottom, to watch out now, or if the real break to the downside is gonna happen, it must happen here. It didn't, so the market rallied another 700, 800 points in like 2 or 3 days, right to the 15,700 level, where I again started to build a short position that was actually on Tuesday, 2 days ago. And that position actually was good for 140, 150 points. So yeah, currently we are trading in no man's land for the day. As I said before, option expiration, the big option expiration will happen next week on Friday. So it's getting interesting next week, in my opinion. I still have my calculated target zone here, which in fact is hit, but my models want to see 15,777, whatever level. So yeah.
Okay. And then you can maybe explain to the beginning traders the relationship between the German index and options trading. So do you like use options to hedge, or like what's that of relationship like?
Well, it depends. It really depends on the market dynamics. Market dynamics extremely change. We are currently in the situation that actually the European market, or the German market itself, is the leading market, because you might have noticed it. European markets quite outperformed US markets lately. It has two or three main reasons I always give. The first reason is US markets outperformed the European markets now for 12 years. Then there is a greater fear of a higher terminal rate in the US. So the Fed will set a higher rate than originally anticipated now in this hiking cycle. And the third reason is why Europe is getting attractive or got attractive again in the last few months, is that the problem with the Russian gas and energy problem on the whole now in winter wasn't that extreme than originally feared. So we can still heat our houses and we can still go to the gas station and fuel the cars. So yeah, that's why the European markets and in fact the European economy, which is a cyclical economy, got attractive for investors again, and the lower euro. That's for fourth reason. Okay, but back to the options. I like to trade the options of the German market. I generally trade the German market. I maybe trade 3, 4, 5 times in a month US market. German market is a, I wouldn't say a small market, but it's overseeable. It's neat. You know, those companies. I mean, it's our core market because we live here. So we have a tighter relation to any European market or German market in particular. You have your weekly option strikes. You have your big option strikes at the 4 big expiration days. So this is pretty calculable, and in other than US markets, we have millions, literally millions of options on those different assets and on those indices. So we keep it simple here. We have the DAX index, obviously other European indices also. But it's a good market to trade. It's a volatile market to trade. There is enough market capitalization, and those options, at least for me, and in my understanding, give a good reading what markets and institutions are about to do. What we witnessed, so I'm talking 5 sentences as an institutional member now. What we witnessed is that many private traders came into this market since probably since the pandemic, because all of this home office situation, etc., market for some reason became popular to trade for retail investors, and that gives us as institutions a very good sentiment where the market is leading to and where it's heading to. You know the disclaimers in the different websites of different brokers, where it says warning, like 80% of our accounts lose their money. So this is related to retail traders, and this is why it's easy for us to get the sense of the sentiment now, because those are flooding the market, and not always, but most of the cases, it's a contraindicator for the big institutions. So yeah, the big boys take the money of the small retailers, but that's the same in every market. But it's especially evident in the German market now. So those levels are pretty predictable, and also as far as options activity is concerned.
All right. And then maybe another question that I had as you were making the presentation is, so right now you're an investment banker. So for the software that you use, is it self-built or like for your own personal trading, or is it like the bank's software that you currently use?
No, I built my own software because I was a simple idea. I wanted to have my brain stick to a binary thing. So originally I built my own software. It lasted like for 6, 7, 8 years to finalize that project. And the script and the ideas are my ideas, but I'm getting the feeds from the exchanges, so the options data, whatever. Actually, I'm allowed to use that software as a trading system also in my job. So yeah.
All right. All right, that's really cool. Like, building, not very many traders have both skills of like developing a trading strategy based on a software. So that's really commendable.
Yeah, actually, I didn't have the skills. I had to ask some computer nerds to do that for me, and otherwise it wouldn't have been possible. I'm a child of the 1980s, so I'm not the generation who does all the fancy programming and stuff. So, but they made it very good.
All right. And then also I noticed that when I was doing my research, that the DAX had initially 30 stocks, but now they're about 40.
Correct.
So, and with every index, you have a combination of like great stocks that outperform other stocks, for example. So maybe for the German index, for a better understanding, you can tell us which stocks normally perform better as compared to other stocks in terms of relativity and strengths. And of course, that combination normally affects the performance of the index. Like you were saying, the European markets have been outperforming the US markets based on, the mathematical, strengths.
Yeah. I'm not the single stock guy because I'm only doing futures options. So I can't answer that question in depth. But what I can say is, I mean, there was a big discussion before they switched from 30 titles to 40 constituents in the DAX index. They also changed the rules. What are the criteria to have a company set to the DAX40 index and what are not, and how many times in the year has this to be re-evaluated, etc., etc. I personally was a big skeptic of that reform, and it's like 3, 4, 5 months when I asked at the German stock exchange, guys, is there any data set which gives us a picture of the old DAX30 index if it would be now, and they refuse to answer. Like, no, there's no data set, and we don't publish those data sets. So from the reaction of that question, it seems that the skeptics, before they switched to the 40 constituents, were right now. So probably a DAX30 would have performed better than a DAX40, but that's my speculation of the whole thing. Okay, back to your question. What I told you at the beginning concerning all that inflation problem and war problem, which is caused by Ukraine, etc. And why German market or European market is outperforming US markets now is because those are considered as cyclical economies, where cyclical stocks lead those markets. For example, car manufacturing, oil and gas, or the chemical industry, because they are those shares who react hefty on the economic situation. So this is why the German market or the DAX index is getting attractive now for investors, also for foreign investors, because of those cyclical shares.
All right. Okay. So I'll ask Kish to also ask her questions. Also, if there are questions from the members, you can type them on the chat box and we can ask Alex. Okay, let me recap her question. She was asking if you use a trend following system, and if you do, how you develop that.
No, no trend following, no.
Okay. So I welcome other questions from the members. Zipporah and George, if you have any questions. Yeah, and if there are no questions, we can wrap it up over here. Thank you so much, Alex, for contributing to our trading lounge. I know it's been a while, and if people want to get in touch with Alex, he's on Twitter at DAX40. That's why he shares his analysis, basically, as we have seen.
Correct.
In this
Correct.
session.
What I don't do there is to do trades, to do live trades, because I don't have the time, and it definitely would bring me into trouble when I do this. But I share my analysis, and what I also wanted to say is you cannot teach Gann or an adapted Gann theory in 30 minutes of time. So I mean, I needed years to understand it, to develop it, to adapt it into this market, and I have to constantly adapt it because the dynamics of the markets change from year to year. So that's pretty hard stuff, and it's a lifetime learning thing. Yeah, but if you follow my account, there are some pretty good hints always.
Yeah, and of course, we'd love to have you again in the future so we can understand more about the Gann theory. And thank you as well for going into the details of your analysis as well. We truly appreciate. So
you're welcome.
Yeah, we'll share this recording with you. Next week, it should be up on our YouTube channel. And
Fine.
Thank you for your time.
Thank you for having me.
All right.
All the best.
Bye.